inflation under, so their mandate's 2%, right? I almost think if they can get inflation under 4%, they'll pat themselves on the back and say, okay, job well done. If it stays above 4%, then they really have to start breaking stuff.
Do you feel that we're potentially entering more of like an inflationary decade? With higher
stagflationary almost, you could say. Yeah, I think that's
so,
the word.
So we've obviously So it's something that I think the first ever TCC podcast that we did.
Did we talk about stagflation?
So that's the first thing I said.
Oh, okay.
So I remember. I think you asked me actually. What was my thoughts on the economy, and I was like, based on everything going on, I think that we probably may see some stagflation.
Okay.
But there's a few things we talked about.
I need to go back and listen to that.
Yeah, I've listened to it back because that was like May last year.
Yeah. Was that the first one?
No, April last year. Yeah.
Yeah. Okay. Yeah. So, April last year probably. Yeah.
But 100%. This is like what I thought was potentially could happen. Who knows? I
think like longer term it's probably going to be stagflation, but in the short to medium term it could be almost deflationary. Because you're starting to see, like I said, with oil and copper coming down, that's like disinflationary forces almost at play there. The low growth narrative, if inflation does start to come down during the end of this year, you'll start seeing like this deflationary regime, and that's generally, if you look back and you kind of back test it on markets, risk assets, deflation is generally a really, really bad regime for risk assets.
Yeah. So, who knows, right? Like all we can do is look at the data that we have and then guess.
But it's crazy because like you're seeing like every single indicator that you look at, PMIs, consumer confidence, it's just everything's rolling over to the downside. It's crazy, and it's just crazy that the Fed aren't seeing that, and they're coming out at every meeting saying the economy is still strong, and that just baffles my mind, man.
Yeah, like even they're so optimistic, and I think that they realise that they can say anything and people believe it. So, even when they said that inflation was transitory, it was quite laughable, and then they said that they anticipate economic growth for the next couple of quarters, and I'm just like, what data are you looking at? Like they've got access to the best data in the world.
100%. Some of the best economists in the world with PhDs.
So I'm like, I don't know what they're looking at, and one thing with economists, which I love economics, but economists 9 times out of 10 are wrong. Actually, most people are. All we can do, like you say, is guesswork, right? We can go off certain bits of data, look at different metrics, and like, well, this makes sense, but unfortunately, markets don't make sense a lot of the time. So
that's what makes it so exciting.
Yeah,
right? Exactly. The speculation of it all.
Exactly.
We've never been in this like macro regime in a long. Macro's front and center now, and it's been a long bloody time since it has been. And it's exciting, man. It's fun. It's fun because it's bad now. Everything is like the worst it's ever been. But generally, when you go through these kind of times, it always gets brighter on the other side. So I'm just looking forward to the next, 2024, 2025, because I know we're going to come out of this and everything's going to be fine again. Always is. Always will be.
So moving on now to cycles, right? Now.
Bitcoin cycles.
Yes.
Okay.
Because I feel I've had many conversations recently with different people, and I feel that my opinion's slightly different to other people.
What is your opinion, out of curiosity?
So I don't believe
the cycles.
No. So I believe in the pre-programmed schedule. Every 210,000 blocks, the reward gets cut in half, and there's a halving.
Yeah.
That's done. That's set in stone till 2140, right?
Okay. Yeah.
I believe in that.
Okay.
I don't believe in the typical Bitcoin cycle that everyone keeps following.
Okay. Yeah.
So, and the reason why, there's many reasons why I did believe in it until this one.
Mm-hmm. As do many others.
Yeah, like things are good till they're not, and a lot of people followed Plan B, stop the flow, and I still see some people clutching straws saying, "Oh, it's still intact." It's not. Like,
no, it's not. It's gone.
If it was intact, this 135k BTC by the end of last year would have been hit. That's what he thought based on his model. Now, the reason why I don't believe in cycles, and I think that people need to be a little bit more open-minded, that things change, and especially when institutional capital flows into markets and they are in the space, it's a different ballgame, right? Now, I know there's a lot of like sort of theories around BlackRock and Luna and all the other stuff, like who knows what really happened, right? Yeah. But overall, DeFi is like one big Ponzi scheme at the moment, right? So, and what frustrates me is a lot of I'm a crypto bull, right? I am 100% crypto bull, right? Okay. I love the technology and I believe in it. However, the cognitive dissonance of certain investors frustrates me, because crypto maxis will say, escape traditional finance into over here into DeFi. And DeFi, a lot of these projects are bigger Ponzi than TradFi. So it's like, you know, what are you escaping? You know, and now we're seeing a lot of these platforms become exposed. At the end of the day, if you got your money in a platform and they limit your withdrawals, right? That's capital controls, right? And people moan about capital controls, right? They preventing a bank run. And but you know, they've just created an amplified version of the fractional reserve banking system. Some of these DeFi Ponzi's, right? But I want to go off on a tangent a sec on DeFi. Now going back to cycles, right? So we've previously never tested a previous cycle all-time top. Sorry.
And we have done.
So we breached the previous cycle top. We didn't have a blow off top. Everyone was expecting. RSI is the most oversold it's ever been in history. This cycle. We're sitting underneath the 200-week moving average. Every previous cycle has signaled a bottom, but now the same people that said the signal's a bottom, or did say it signaled a bottom, are the same people calling for 10 to 13k Bitcoin or lower. So I don't understand how that works. And what I find is the people that are calling for like 3, 6k, 10k Bitcoin now, who were like dead set on it, were the ones that were calling for 250k Bitcoin about 6 months ago. It's underperformed massively. If you actually look at the logarithmic growth curves, this cycle's massively underperformed the previous cycles as well, which I understand in extended cycles, etc. But it has massively underperformed. The MVRV Z-score, which meant to indicate a bottom as well, you know, we've which relative to Bitcoin's fair value, and also we set technically an all-time high in a bear market. Now, so at the Bitcoin conference, I was listening to this on-chain expert, and I never thought of this, right? He's like, we set an all-time high in the bear market, and he started to explain it. But based on on-chain data, the 69,000 Bitcoin top was set in a bear market. So the same people that are like, well, bear markets only last this long, they pull the bars across on TradingView, and they're like, there's how many days till the next bull run, right? Well, if we set an all-time high, if our cycle top was 64k, then we've already should be back in the bull market, right? Based on the last cycle, I think it's like 420 days. We're now like 440 something, right? If the cycle top was November, which is set in a bear market, which if that was the cycle top and technically it wasn't a bear market, then it can't really be a cycle top, right? It's a strange one. Never happened before. Then we're like 250 days or something into this bear market. So, long-winded question, but do you think the typical Bitcoin cycle that everyone follows still intact first?
Yes, see, I answered this almost just before. Yes and no. I don't know. I almost feel like this is what I was saying before. Like when something becomes so obvious and it's a narrative. Like everyone over Twitter, when this cycle was going on, everyone over Twitter was posting these cycles. You know, like how TCC had put together. They were kind of one of the first guys that I saw putting together the kind of whole cycle and breaking it down. But eventually it was everyone that was talking about it, and it just becomes too obvious. And when it becomes too obvious, the market almost has this sixth sense, and it knows. So I feel like the cycle's broken. I don't feel like going forward we're going to get the typical, like you said, the blow off tops, and it's not going to go below the previous all-time high. It's already broken now anyway. Do you know what I mean? And I feel like I said, it's going to revolve more around this supply-demand aspect. What are longer-term holders doing with their Bitcoin? Where's the demand coming from? Are institutions getting involved or not? And obviously the macro environment as well, considering if inflation does linger around for longer than expected, then yeah, it's going to have more of an impact over the coming years. And is Bitcoin going to be an inflation hedge? Well, it hasn't really been over the last 6 months, I'll tell you that much. So yeah, I don't believe this. I think the cycle is broken now, 100%.
So my next question would be, is the best way to navigate, like, 'cause I don't look at like Bitcoin and crypto, in my opinion, it's just two different things, right? Crypto to me, it's the same, but my point is, I think they should be looked at slightly differently. I don't think you can compare Bitcoin with Ethereum. You can't compare Bitcoin with Solana. I just don't. There's no comparison, right? And I look at it now, and you think, what really cracks me up is in a bull market, everyone wants to capitalize on opportunity, right? Which I don't blame them. And the greed sets in, right? And people get obsessed with unrealized gains. consistently refreshing their portfolio, and they get obsessed with it, right?
Standard bull market behaviour.
Exactly. And then they start going further out the risk curve and looking at different things, right? And then in a peak bull market, no one wants Bitcoin. None of the new crypto investors are like, oh, what's the point? I can get 1,000x over there on some stupid food coin or whatever, right?
Could be a reason as well why Bitcoin underperformed this cycle, because there was this emergence of so many different layer 1s, layer 2s, DeFi, all this kind of stuff. That's probably why maybe Bitcoin underperformed, because the risk appetite was so high because of this incredible 24 months that we lived through. But yeah, go on, continue.
Yeah, sure. And I think DeFi summer played a massive part of this cycle. And then even into January 21, when we've seen Yearn Finance launch like yield farming, and then all the others come after it.
I had someone in January to tell me were begging me literally to put my money into Anchor.
Okay.
I was like, seems a bit too good to be true, man. Like, it was like, what? So I can just deposit my money in there and just withdraw it whenever I want, and it'll just tick over. And he's like, yeah. I was like,
well,
nah, man.
That's the thing. It's like, a lot of these DeFi protocols, if they seem too good to be true, they usually are.
Where's the yield coming from? That's the question, right?
Exactly.
If you don't know where the yield's coming from, you are the yield.
Yeah, 100%. And the thing I look at it is like, right, do you want to risk, the actual token itself for 20% yield?
True,
So it's all good getting these, like, even like when you see Pancake Swap and all these high yields and stuff, like, yeah, great. If you want to do that, cool, right? But if you risk some sort of, liquidity issue or token collapse, if you're willing to risk that, then that's fine for yield, right? But when things like the market, the market will always dictate what happens, right? It'll just tell you, it'll punch you in the face more than once. Now, when stuff like this happens, like where we're at today, all of a sudden everyone wants to be just in Bitcoin. If you said to most people,
generally the case in pen markets,
if you could just pick something to be in now, or you could move your portfolio same value into one token, it's like Bitcoin. But no one wants this. I understand people, the risk appetite, like you said, gets huge. But I also think that people approach, like, and I'll say with crypto, right? So crypto, if you don't know your risk appetite or your time horizon, you'll learn quite quickly in crypto, because it'll dictate the pace of that for you. If you think you understand your risk appetite, until you've gone through a downturn or some sort of correction in crypto, you don't really know your full risk appetite until you're exposed to the market, right? The same as time horizon. People come into the market, their time horizons, I'm going to get in and out this cycle, make loads of money and invest in property or buy a Lambo or whatever, and all of a sudden the same people who were meant to be in it for 4 or 6 months are now happy to wait 4 years. It plays with you emotionally, right? So onto the DeFi stuff. What's your thoughts currently on DeFi and what I mentioned about the sort of Ponzi-ish bits of DeFi at the moment?
Like Luna and all that kind of stuff.
It's everything at the moment.
To be honest, even during the bull market, I never really dabbled into DeFi. I never put my money and locked it up into a DeFi protocol. It just wasn't for me. And I looked into it, I read about it, I just didn't understand it properly. Like, when it came to all the yield and all that kind of stuff, so I never really dabbled my money into it. But it's insane what's happened, obviously, with the Luna stuff and then the 3 hours capital and all that kind of stuff. And to be honest with you, I think it's just a knock-on effect of the liquidity purge that's happened in markets. I'm not saying that it was always going to happen, I could have forecasted it last year or anything, but generally when liquidity gets pulled out of the market, and you're talking about the most illiquid market in the world in crypto, these things are going to blow up. It's guaranteed to happen, and the more, kind of like you said, the more things on the further end of the risk curve, like Luna, like these DeFi protocols, they're going to get hammered. So it is what it is. It's just a part of global liquidity declining. That's all it is.
And of course we want to see stuff evolve, and this space moves very quickly. But even like the layer ones, right? You're looking at they talk about the trilemma and all the issues there. But when you look at like ETH, March, who's meant to upgrade to the beacon chain, still struggling, very struggling to scale. Solana struggling to scale, having all sorts of issues. So even like the top layer ones aren't ready. Like they've scaled too quick, and you've got all these things built on them. And then if you look at Luna, like there was some protocols that were built on Luna was like, oh, we're still good. And so that I think that's a big issue. But we're also seeing now Mr. Crypto Goldman Sachs, Sam Bankman-Fried, he's like, I think that M&A in crypto is going to go crazy, and I think that he's already bailing people out, looking to acquire different. And like he's just sat there with a ton of money, and he's ready to go. Now I think obviously trust is probably number one when it comes to any of these projects, right? The trust. So as soon as the trust's gone, the project's gone, right? No matter how good it is. Now, I think, what's your thoughts on Celsius, right? Because Celsius now bought their liquidation price. I think, I don't know, it was like, last time I seen it was 4K. They bring it down every day. It might be like 2
really?
now or something. So yeah, I think their liquidation price is sub 4K now. I think actually last night Harks told me it was like 2 on one of our sessions, but whatever, it's under 4K. Now,
who's bailed them out? Is it Sam that's bailed them out?
I don't actually, I think so. I'm not actually sure. So looking at Celsius now, trust went like instantly when all that happened, right? Do you feel them now sort of, you know, bringing that down to 4K? I don't think they've allowed people to withdraw yet, but when that happens, are they risking everyone just taking everything, or do you feel that trust now can be basically bought again?
I don't think so. I don't think the trust, like you said, when once trust's gone, trust's gone. But I feel like almost with these kind of larger market participants, like the Celsiuses, like all these other people, I feel like almost the market fishes to liquidate them almost. Do you know what I mean?
Yeah.
So it's very risky. It's just more risk that's overhanging on the market with these bigger players in the market like this. So yeah, man, it's interesting. Yeah, I almost, yeah, like I said, the market almost, when it comes to these bigger participants, it will look to fish them out of the market. So if they'll lower their liquidation down to like 8 or 9K, the market will probably go and take that out before it continues higher. So it's a major risk to all these kind of protocols, all these Celsiuses and all this kind of stuff in the market still, and that's still the risk of Bitcoin going under 10K.
Yeah,
opinion.
you know, if anyone's still got their money on exchanges, for me, it's centralized.
Again,
exchange.
it's the bear market narrative, isn't it? Not your keys, not your crypto. But in the bull market, nobody talks about
yeah,
that.
no one cares. And
Nobody talks about that.
Obviously, with everything that's going on, even more so now, it's like, look, you know, you take full custody because we don't know who's safe and who isn't. To be fair, the way I look at it, FTX are clearly liquid, and even all the uncertainty around Binance, when they came out, it was like a week ago or 2 weeks ago, and Ronaldo became
and that TikTok guy as well.
Yeah, I felt like that was like a bit of like a dig to say like we're good over here, you know what I mean? Because Ronaldo's team are going to do a lot of due diligence on what he gets involved in. So, but you know, who knows? You know, we've seen Crypto.com chuck hundreds of millions in advertising, so we don't know who is safe and who isn't. There's a lot of talk around Coinbase, and I did see that Coinbase Ventures as well that were quite heavily invested in Luna. So you know, which made me realise like not that many people thought that was going to happen, because you know, why would someone like Coinbase Ventures be invested? So that's another thing. The next thing I wanted to quickly talk about was NFTs. Now for me, you know, these have never experienced a bear market before, right? It'd be interesting to see if their communities actually hold up in a bear market. And another thing is, we've seen a lot of, you know, platforms that have a decent reputation have issues, right? So my thoughts are, what if OpenSea has issues and goes offline? Right, where's the JPEG, right? Because there's a lot of talk, are these even on the blockchain? A lot of these JPEGs, even like the Bored Apes, I've seen a lot of people be like, are these actually on the blockchain?
There's a lot of like hacks and stuff going on as well. Is it hacks? Yeah.
Yeah,
people
so
getting
like
their
fake minting, hacks on OpenSea. Like, I'm not really into NFTs.
I'm not even. I was going to say you're asking the wrong page. I'm a shit, man.
Yeah. Like to me, I'm more like waiting for their real world utility. I think you know, concert tickets. I think you know that's all going to come, NFT mortgages and whatever. But like, yeah, what's your thoughts on like how NFTs are going to cope through this bear market? Because you know,
to be honest, I like obviously Amish is the expert when it comes to NFTs, and I follow him on Twitter, of course, and I feel like they are going through like a mini bull run almost at the moment, NFTs, or they're setting up for one anyway, according to what some people are saying. It is very different, to be honest with you, because they're so illiquid, NFTs, you can't, if you wanted to sell them right now, you couldn't sell them, right? So that's kind of one side of the thing. And the other side of the thing is, I feel like people are more religious to NFTs than they are to like crypto coins like Bitcoin and ETH. I feel like they're more religious to those communities and those projects, because the minute you change your profile picture to a Bored Ape or a punk, you'll have like 100 people from that community following you, and you'll automatically have like 100 new friends. So it's much more different than being a Bitcoin maxi or a ETH maxi, you know. I don't know how the NFT market moves in that sense, in all honesty. It'll have its little mini bull and bear runs. I think recently at NFT NYC there was a project called Doodles. I don't know if you heard of Doodles.
No.
They made a lot of noise. One of my friends I don't know if you heard of a project called Third Web. They've basically like, because like NFT platforms and marketplaces need a lot of code to build, they've basically created an application which allows you to build NFT products without the code. Super successful at the moment. But essentially he was like one of my friends who was part of that company, who's a Doodles holder, and they're making big moves at the moment. They've just hired Pharrell as their creative director. So if anything, NFT projects seem like they're doing what people should be doing in a bear market, which is building.
Yeah.
Let's see what happens when the next bull run gets catalyzed. But at the moment, I feel like NFTs are just going to be like this.
Yeah.
They're just going to be like that.
Yeah. Because in the current climate, if you paid a couple of million for a picture of a JPEG, you got to find someone else. In my opinion,
I think one of Logan Paul's mates spent like 800k on a Bored Ape right at the top.
You got to find someone else who's willing to.
Yeah, willing to pay that amount. You're not gonna.
Yeah. So another thing that I think Vitalik's been talking about recently is the SBTs, the soul-bound tokens. I'm not sure if you've heard of them.
Yeah, I've heard of that.
So they're untradeable, and they're going to be mainly for like accreditations and employment history, and so you don't trade them. And he's talking like they're going to be more towards proof of character rather than like proof of wealth, like NFTs. If you've got like a Bored Ape, it's like yeah, you got a Bored Ape, or you got a CryptoPunk. So it's interesting to see the development, and that's what I do like in like bear markets is you start to see which companies are serious about actually active development and like growing the utility of their protocol, because the ones that are just like, we can just make any old thing and promote it with some silly yield and everyone's just going to dive in, where I think that that's where it's good to see. And plus, recessions and bear markets are great for hiring, because you can hire some of the best people, because people start cutting, like you see now, like even Tesla and Amazon.
A lot of layoffs happening right now.
Yeah. Now, last thing that I'd like to ask is big question, right? And I know you're a macro guy, and I love macro myself, but does macro even matter anymore, right? And the reason why I ask that is because we got economic deceleration, declining PMI, we don't know where real inflation's at. The Fed's not in a great place, like we said, but they've got all the data. We can't predict the outcome of this. And we've seen a lot of the macro sort of experts in the space that people look up to be wrong many times in this. And it's because a lot of it hasn't happened before. We still got like the heavyweights there that make sense of what they're saying. But are we in a situation like currently, like, does macro matter?
Of course it does. I think it does.
I think it does, but I'm just asking.
I think it does. Yeah, 100%, man. I think it's front and center, man. Like everything that's happening right now, every week, it seems like almost every week there's some sort of data set coming out which everyone's like fearful of. Like this week we've got inflation.
Yeah.
This week we've got inflation. We've got.
Is that this week? Is it 27?
CPI? Yeah, I believe it's this week.
Okay. Well, it's soon anyway.
Yeah, we've got CPI this week. We've got US retail sales this week. We've got consumer confidence on Friday. We've got we've got Governor Bailey from Bank of England speaking today and tomorrow. It's everywhere, man. Macro is everywhere. You can't get away from it. Versus 2021 and 2020, there was nowhere to be seen. Nobody cared. Everyone was just piling their money into risk assets because it was just going up. Everyone knew number was going up. Nobody cared. But now it matters, and you need I said it in March. You need an understanding of this stuff, man. Otherwise, you're not going to survive the next 12 months, arguably even longer if they don't get inflation under control. So it matters, man, and you need to understand this stuff.
I agree, and I think that anyone that hasn't signed up to Macro IQ is crazy.
Oh, you're too kind, mate.
No, honestly, like I even like currency wars or something again, mate. Like,
appreciate that.
Yeah, because James Sahota interviewed me in 2020 and was looking at all the geopolitical tensions, and it was when China was first talking about CBDCs. The Bank of England, January 2020, Rishi first mentioned about central bank digital currency So I was like, and then when Zoom and stuff happened, it's like, people are doing business deals in different countries in the world, who gets the tax if something is done. There's a lot of things that was happening. So I was like, that was one of the things that me and James was talking about. He's asking me about it. And then when you published that the other day, I was like, this is so important right now to understand geopolitics.
That last bit, especially around China, Russia, and their whole relationship, is very interesting.
Very interesting,
especially with the dollar right now, because the dollar's like absolutely soaring every single day. But you've got this kind of side narrative going on where like all these non-Western countries are trying to make the shift away from the dollar, and it's just fascinating, man.
Yeah, and this is completely for a different
we could go
podcast,
on for
right?
half an hour on this one, mate,
but there's a thing called Belt Road Initiative, right? I'm not sure if you've heard of it. China they've been working on this since 2013, right? So it's like it's like railroads, fiber optic cables, shipping routes, and it's all around sort of Asia, Africa, Europe, and they've got 60 countries agreed already, signed up to the agreement. Like they've got Kazakhstan, major trade sort of route in Kazakhstan, all down to Sri Lanka. But have you read the book Economic Hitman?
I have not.
So it basically shows you what America have done to a lot of the world, right? But they've kind of gone down the same route. So they give Sri Lanka a $1.5 billion loan to build this sort of deep water port, which is a key part of, I think it was the Maritime Silk Road, part of the Belt Road Initiative. And because they couldn't afford to pay it back, they've now got control over a 99-year lease of the port. And now these 60 countries that they've signed up, a lot of these they've loaned money to,
right.
and they're going to end up not being able to pay it back, and then they're going to control the entire thing, so they run the monopoly.
Well, look at Sri Lanka now.
Oh yeah, exactly. So and this is the thing. So when you start looking at China being a superpower, they've done it. They've taken that gently gets the Bentley route. They've taken it slow. Honestly, they've taken it so slow, right? And now it's coming to the forefront where it's like
starting to accelerate a bit more.
They have made some real good decisions over a long period of time.
Very good decisions.
And taking control. They've already got more trade partners than anyone in the world. If you look at the 80s, where America was control of global trade, today China is, and China's got more trade partners than anyone in the world, right? And when you think of how they've done that over quite a short space of time, the next 20 years are going to be super interesting. But honestly, like, keep putting those articles out, mate, because they're really good reads. I know other people's complimenting you on being a good writer. Don't stop, because they're awesome, honestly. Like, yeah, really.
You were talking about the BIS before, allowing central banks to add 1% Bitcoin to their balance sheet, but BIS also created like a renminbi liquidity pool as well. I don't know if you saw that article.
No, I haven't seen that.
Yeah. So they've started. They've created a renminbi liquidity pool now. So generally they tend to serve the dollar and create dollar liquidity pools around the world. Now they're starting to create RMB liquidity pools, mainly for like the Asia region. But still, the significance of that and the timing of that right now. Yeah.
Yeah, well, look, I'm going to be staying updated to Macro IQ anyway, and I'm sure you're going to be on here very, very soon again anyway. But
appreciate it, mate.
I appreciate you coming down here today.
No problem.
Always good catching up with you.
Good to see you for the first time, man.
Yeah, exactly. The first time in person.
Yeah.
But yeah, we'll be doing more of these anyway.
Appreciate it, bro. Thank you for having me on.
Awesome.